In the previous slide, we talked about the total direct materials and the total direct labor variances, and they're separated into cost for purposes of analyzing. So here we have total direct materials cost variance equals the price variance plus the quantity variance. So we actually have to do these two separate. And my labor cost variance is broken into labor rate plus labor time or labor efficiency. First, we're going to examine direct materials. And this is, don't forget, we're making jeans. During June, we reported that our direct materials cost variance was $26.50. Our actual cost total was this. Our standard cost total was this. So let's break down to see how we actually got these numbers. So here's my formula. You can write this formula down right here if you'd like, but it is on the handout I'll be giving. So my actual direct materials cost variance is the actual price times the actual quantity. We already determined that we were given this information, our actual price, AP times AQ. So our actual price is $5.50, our actual quantity was 7,300. That's how we ended up with the actual cost of $40,150. My standards were set by my standard price per square yard and my standard quantity. So these are how these numbers were set with standard. This is called AP, this is AQ. This is SP, this is SQ. And I'll show you the handout sheet I made at the end of the video. So here's the actual formula for just the price variance. So let's go back one slide, guys. So we're going to, let's go back 2 slides. We're going to actually do 2 separate equations, one for price variances, one for quantity variance, and then we'll add the 2 numbers together. Okay, so we're going to do price variance first. So here's the formula. AP minus SP times AQ. So that's actual price minus standard price times the actual quantity. Remember, it's either going to be favorable or unfavorable depending on what happens. So here's my information. My actual price is $5.50 minus my standard price is $5. It's very important on this formula that you put it in this way and that you don't reverse it. Because if you reverse it, it changes the unfavorable or favorable portion. So $5.50 minus $5 is 50 cents times my actual quantity of 7,300. So my price variance, my direct materials price variance is unfavorable because it's positive by $36.50. So this is just 1/2 of the direct materials cost, overall cost variance. This is just the pricing. Now we're going to move to the quantity. So the quantity is this formula. The actual quantity minus the standard quantity times the standard price. And on my sheet, I will use acronyms that say AQ minus SQ times SP. So here we go, my actual quantity minus my standard quantity. Now notice the format I have. So I'm going to end up at a negative 200 yards times my standard price of $5. So my number is negative. When it's negative, immediately you know that it is favorable. So here is the flow chart that you're going to see. Here's what you're going to see in direct materials cost variance. So over here, and I have a formula sheet for this, it's going to be actual cost times actual price is this. Here's my actual quantity times standard price. And here's my standard quantity times standard price. And I'm basically going to take these 2 numbers here and subtract. This was just the price variance for this was just my direct materials price variance. Here was my direct materials quantity variance. And then I add the 2 numbers actually. So it's this plus this will equal this. Okay? Just so you know, the $26.50 is unfavorable. That means it costs me more than it should have. So when you see my actual chart, you'll understand this a little bit better. I have it broken down into little formulas. After I talk about each of these for direct materials, direct labor, and factory overhead, I will put up my little handout and I'll have a video for my handout. Okay, so this is just direct material variances, talks about reporting it. We're going to skip past that. We're going to move to labor variances. Remember, labor is broken into time and rate. Time means efficiency. So according to my my budget report, I had a cost variance of 2,500. So when it's positive, it's unfavorable. I spent more than I anticipated. And how I got these numbers was actual rate times actual time, standard rate times standard time. And most of the time you're going to be given this information. You won't have to come up with it. Here's the most important formula you need right now. Right here. My direct labor rate variance. So we're going to take one at a time. First we're going to do the labor rate, then we're going to do the time. Actual rate minus standard rate, or AR minus SR, times actual hours. Make sure you put the actual first so that when you subtract, you're not in the wrong direction on the sign. So my actual rate is $10 per hour minus my standard was 9. So that gives me $1 times my actual hours. So my labor rate variance, which is 1/2 of the overall labor cost variance, is $38.50 unfavorable. So this is just half of the formula. We now need to move to the time or the efficiency variance. So that's over here, and here's how I calculate it. Actual hours minus standard hours times standard rate. Hope I'm not moving too quickly. And here we go. So actual direct labor hours were $38.50 minus 4,000. Notice the order. Actual comes first. So I'm at a negative 150 times my standard rate per hour. So because my number is negative, it's going to be favorable. That's the key right there. And here's the flow chart, like the direct materials flow chart, just to kind of give you an idea. I calculate this. So I calculate my actual cost here, and my standard costs are over here. And so when I subtract my rate variance here, that's from this number, I come up with this. My time variance is this minus this. Notice the order. So when I get these two answers here, I add them. 38.50 unfavorable plus negative 13.50 favorable will give me my 2,500 unfavorable. This is for my total direct labor cost variance. So these are the type of charts that I'm going to show you shortly, and it's going to have acronyms up here. But these are the ones you absolutely need. On the next video, we will start with the factory overhead.